And thank you everyone for joining us this evening on our webinar on Life Insurance 101, the basics. My name is Garrett Radigan. I'm USAA Product Management Director and retired Chief Warrant Officer. I'll be your host for the evening. With me are my associates, Bob Buss, USAA Product Management Director and Army veteran, who will be presenting our webinar topics, and Casey Reinhart, Manager, Life Specialization, who will be monitoring and conducting our Q&A. We have an exciting agenda to be sharing with you this evening. The topics Bob will be covering are life insurance, what is it and why is it important? Discussing the two main types of life insurance, temporary and permanent, and doing a comparison of the two. He'll be discussing the differences between owning a individual life insurance policy as well as group life insurance offered through your employer. He'll be going over how to calculate your life insurance needs, understanding the underwriting process and what it takes to acquire a life insurance policy, personalizing your policy with riders, and then we'll be moving into our Q&A. Now, for those of you who might not know the history of USAA, I'd like to share a little bit about our mission and who we serve. USAA was founded in 1922 when 25 Army officers formed an association to insure their vehicles. Now, over 100 years later, in serving nearly 13 million members, our mission has not changed. We seek to be the provider of choice to the military community and their family. Now, before we get started, I'd like to take a minute to go over a few housekeeping items. First, you'll notice a button on the bottom of the Zoom webinar screen that says Q&A. Should you have any questions throughout the webinar, please submit them by clicking the button and typing your question into the box. You are the only one other than the panelists that can see your question, and none of your information will be shared. But I still advise against putting any personal information into the chat. We'll have time at the end of the webinar for Casey to address submitted questions. Throughout the webinar, we'll also be running several polls. These will appear on the screen and you can interact with them and cast your vote. Now, I know a number of you have signed up to receive a follow-up call from one of our specialists after the webinar, and we'll be conducting those follow-up calls within the coming week or two, and we look forward to speaking with you. Tonight's webinar is also being recorded, so everyone that has signed up for the webinar will receive a link to the replay in the coming days. And that about rounds out our housekeeping items. Bob, I'm going to pass it over to you.
Thank you, Garrett. And thank you, everybody, for taking time out of your busy schedule to join us tonight. We look forward to helping you get a better understanding of life insurance and how it can apply what you learn to your own family's needs. So let's get started. In simple terms, a life insurance contract between a policyholder and an insurance company, where the insurance company promises to pay a sum of money upon the death of the insured in exchange for a premium paid. So there's multiple parts of the contract, and the main parties of the life insurance contract are the owner, payer, insured, and the beneficiaries. The owner is a person that controls everything in the policy. They make decisions, choose beneficiaries, and they're the one that can make any changes to the policy. The payer, as it says, that's the person that's making the payments. The insured, this is the individual whose life is covered by the policy. If that person passes away, that's when the death benefit is paid out to the next group, which is the beneficiary. In most instances, the person who owns the policy is also the insured and payer of that policy. However, the owner, insured, and payer can all be different people in different situations. The beneficiary, which I just mentioned, is the person, people, or even an entity that will receive the death benefit upon the passing of the insured. Beneficiaries can be primary or contingent. If the primary beneficiary is no longer living, then the death benefit will be paid to the contingent beneficiary. Example, I'm an insured and my wife is the beneficiary. Something happens to both of us, and my brother is who would be taking care of the family. If something happened to us, my brother could be the contingent beneficiary. You don't want to put your kids as contingent beneficiary until they're age of majority adults. Special note to beneficiaries: if you have a policy now and you've gone through life changes since you originally bought that policy, such as divorce, check to see what you have as a beneficiary. And here's a story for you on that. Way back when I was on the phones talking to members, talked to this one nice colonel, and we were doing a review. And I wanted to make sure, one of the things we do is check beneficiaries just to make sure they're right. So we started, I said, okay, who do you want to be your beneficiary? And he said, Sylvia. I said, that's not who's listed. He goes, is it Martha, my ex-wife? I said, no. And he said, is it Lola, my wife before that? No. And then he said, no, it can't be Misty, my first wife. I said, it is Misty. So last thing you want to do is do all the work to get your life insurance right and it go to the wrong person. So just a word to the wise. If you have insurance now and you haven't done that in a while, and you have any situation that remotely resembles that kernel situation, you might want to take a look at that. So the last part of the insurance contract is the insurer, like USAA, the insurance company that issues the life insurance policy and pays the death benefit. You definitely want to be sure to select a reputable company with a strong financial rating to ensure they can pay out the claims in the future. So now we have identified the key players in the life insurance contract. You might ask yourself, why? Why would someone consider buying life insurance? Well, the main focus of your life insurance is to make sure if you pass away, your family can maintain the life they're used to and be able to still meet goals that you were saving for. So here's a scenario. This is actually a true story. About 20 years ago, my little brother gave me a call. He had just attended a funeral for one of his friends that passed away. And that friend passed away in a car accident. He was around 35-ish at the time and was married and had 2 children. You know, the topic of life insurance comes up more often than not in places like funerals, because what's the question? Everybody's asking everybody, did he have any life insurance? Sadly, in this case, he had no life insurance. So what eventually happened is his spouse and kids had to move because they couldn't afford the house they were in, had to move to a lower cost situation, which wasn't in the place they wanted to be. The kids had to move schools, which of course they didn't want to do. And then even the funeral itself was paid for in most part by a GoFundMe page. So he called me because he knew I had stepped away from the life insurance business, but at that time he calls me and says, you know about this, and told me the situation, told him what to do. He got his life insurance set up based on what needs, which we'll talk about in a minute, tailored the coverage to make sure all was taken care of. And sadly, my brother passed away 4 years ago unexpectedly. Good news is his wife and 3 school-age kids at that time were able to maintain the life they were accustomed to, live at the home they were in. Of course, they missed him, but they were able to move forward in the right way. So when figuring out what and why you need life insurance, remember, don't ask your neighbor or coworker what they have and think that's the answer, because your situation probably is not the same as theirs. Every person in every family situation is unique. This is why it is important to understand what your individual needs are, and when it comes time to life insurance protection, to ensure you're protecting what matters most. Let's dive into some of the most common reasons people purchase life insurance and how it could potentially benefit you and your family. So first one you'll see on the slide there is income replacement. This is replacing the income of whoever passed away for a period of time, making sure their family can maintain their standard of living. This is extremely important for the primary wage earner. And then debt and mortgage protection, pay off outstanding debts, things like credit cards, auto loans, mortgages, ensuring your loved ones aren't burdened with these financial obligations. And then another thing, children's education, provides funds for the future needs and helps to ensure the kids' future opportunities are not limited by financial constraints following a parent's passing. Then there's funeral costs and final expenses. You know, as we know, the average funeral can be very costly. Making sure you have insurance in place to cover the cost of funeral. And then also remember, there's things like medical expenses, could be legal expenses as well, that can prevent this financial strain during an already challenging time if you have proper insurance. Inheritance and legacy building. Some people choose to leave a financial legacy or provide a tax-free sum to their heirs. And then business purposes. This could be a whole nother webinar. Life insurance can be used as a means for business continuation should something happen to a business owner or a key employee for that business. And then there's charitable giving. You might have a charity that you feel very strongly about. This enables you to set up a benefit for that charity and leave a lasting impact. One of the things you don't see on that slide is a non-working spouse. Many people don't catch this. You have a wife with kids at home. She's not working, but she's taking care of the family. If something happens to her, or it could be a him, other way, if a guy is the non-working spouse, there'll be an extreme emotional hardship, but also can be tough, a very tough financial situation. So what are we looking at? Well, of course, as we talked about above, final expenses. But then there's, hey, if I have kids, what's going to happen to them? Because now he or she is not there to take care of them. So you have childcare costs to take care of the kids. So something else to remember. Now that we've explored the many ways life insurance can protect our loved ones, financial security, let's dive into what options are available. Next, to make the best decision, we need to understand the key differences between term and perm insurance. But before we do that, Garrett, take it away for our first poll question.
Thank you, Bob. And our first poll question is, are you currently covered by any form of life insurance? A few seconds for some responses to come in.
Going in fast.
Give it another second or two for anybody else to go through and put in their answer. And I'll be closing out the poll. And so those are some pretty good results. Looking at about 83% that do have life insurance. I like that.
Yeah, it's good to see 83% there.
All right, Bob, back over to you.
All right, next we're talking about term versus perm insurance. Starting with the basics, life insurance can broadly be categorized into those two types. So term insurance, when I think of term insurance, I'm thinking, always looking for the most bang for your buck. That's term insurance. It's going to be very inexpensive, but term is temporary in nature. It is designed to provide financial protection for a specific period of time, usually between 10 and 30 years. There are also some that renew annually up to a certain age. Term life insurance is ideal for those needing coverage for a specific financial obligation that will end. As we talked about in the last slide, mortgages, children's education, and other debts, they will come to an end at some point. Think of it as a safety net that provides a substantially large financial benefit for a low monthly premium. If the insured passes away during the policy term, the death benefit is paid out to beneficiaries. It's straightforward and often more affordable, making it a popular choice, especially for younger families. Your downside is when term insurance expires, you still have an insurance need. Renewing the policy or qualifying to purchase a new policy will be more expensive now that you are older and your other things may change as well. Here's a true story. I love to tell stories, as you can tell. Back when I was on the phones again, I had a member come in and we talked. He had all of his other life insurance needs covered. He was, did really well in his job. And he said from his income, he could pay for college for his kids, but wanted protection just in case he wasn't there. So what he was looking for is covering a 10-year period. So what he did was bought a 10-year term for this situation. The sad news, he passed away in a car accident a few years later. But of course, the good news is all of his kids definitely went to college. Perm, on the other side, we have permanent life insurance, which includes whole life and universal life. Unlike term insurance, permanent insurance provides lifetime coverage and comes with a cash value component, a savings component. This cash value can be seen as a savings vehicle within the policy, growing tax deferred over time. It can be borrowed against or even withdrawn, offering financial flexibility. The cash value in your permanent policy is what enables your premiums to remain the same as you get older and an individual's cost of insurance increases. Permanent insurance is ideal for those seeking coverage that lasts a lifetime to cover things as we talked before, funeral costs, final expenses, the leaving a legacy, and even estate planning purposes. Those all end when you end. Those all come up when you end. It's a better way to say it. Choosing between term and permanent insurance isn't about determining which is better, rather, which is more suitable for your current situation. For instance, a young couple with children might opt for term insurance for financial protection, while someone looking for an estate planning tool may lean towards permanent insurance. Most of the time, a combination of term and perm insurance proves to be the ideal solution for those seeking full financial protection. Like I had said earlier, term is for financial situations that will come to an end, and perm is for lifetime needs. It's that time again, Garrett. How about another poll question?
All right, bringing it right up, Bob. And so our second poll question of the day will be, which type of life insurance are you more inclined to consider? And we'll give it a little bit for the answers to be coming in. And responses are slowing down. Looks like we're just about to an end. I'm gonna go through and end the poll and share the results, and I'm happy about these results as well. Seeing that more than 50% are more inclined for a combination, making sure that they're covering both their temporary and their permanent needs.
And a lot of this depends on where you are in life too. I mean, the term insurance by itself could be a younger couple. That permanent insurance might be someone getting more on the other end of life. So yeah, looks like a pretty savvy crowd there.
All right, now we're going to get into individual and group coverage. Go ahead.
All right, I got it. Having talked about the differences between perm and term life insurance, let's talk about the two common ways people often acquire life insurance. Individual, as Garrett said, individual and group coverage. Each have their unique set of features, benefits, and things to consider. Let's start with individual coverage. It's a policy that you purchase on your own, tailored specifically for you. It's like buying that custom suit or that dress that's fitted and fits your personal needs. The premiums for these policies are generally fixed. This means you'll know exactly what to expect in terms of cost year after year. One of the standout features is the potential for long-term protection or even lifetime coverage with permanent policies. If you do opt for a permanent policy, as we talked about earlier, it may come with an added advantage of building cash value over time. Furthermore, individual policies offer unparalleled flexibility, letting you adjust coverage, add riders, which we'll talk about shortly, and change beneficiaries as life evolves. Now, group coverage, and I'm not saying it's bad, this is what's offered through your employer. One of its main advantages is its ease of enrollment. Getting started with group coverage can be relatively seamless. Many employers provide a base amount, sometimes as a complimentary benefit without the need of medical exam or detailed underwriting. A lot of times the basic amount might have a slight charge, but it's subsidized by your employer. Portability is a concern with group policies. Some may offer an option to convert to an individual policy when terminating employment. However, you will want to look into what options are available and what their cost would be post-employment. One of the things to know is in group coverage, you're rated as the whole group. So that's why what you can convert into may change over time as well. Group coverage often reflects a multiple of your salary and will usually have a cap that could be fixed at 6 or 8 times your salary. There are a few additional considerations with group coverage, which are, and USAA, if I have any employees on with me, we just got notice that we're doing our annual enrollment. So with group coverage, you typically have to re-enroll each year. There is no guarantee that the terms, conditions, or cost will even remain the same. Premium fluctuations, while the initial cost might be low, premiums can increase annually, especially if the group as a whole poses a higher risk. So for example, if I'm in a group that we're not hiring a lot of new younger people, and that group is getting older, the pricing may go up as well because the group is a higher risk now. Coverage termination, possibly the most significant caveat. If you leave or lose your job, your coverage might end. Again, it is important to check the terms of your coverage with your employer. Also, the employer can decide to cut costs and even discontinue offering group coverage altogether. While the convenience and initial savings for group coverage is very appealing, it is crucial to weigh its limitations. By supplementing the basic offerings of your group benefits with a more comprehensive protection of individual policies, you'll effectively bridge gaps, ensuring coverage across all of life's milestones. Not saying to drop your group coverage and get individual coverage. Usually the best deal is to take that 1 or 2 times that you're getting it that's subsidized, that is a standard offer, and compare which is best after that. Now, there is one group coverage we highly recommend. Remember, we're USAA serving the military. Well, there is a military policy we highly recommend, and it's called Servicemen's Group Life Insurance, SGLI. We will always tell you to get that. If you call in and you're new to the military and you ask about it, we're always going to recommend it. Okay, back to you, Garrett, for another poll question.
Thank you, Bob. And as you're mentioning, we're going through our annual enrollment. And so it's always a good time to go through and take a look at what you have available to you and what is being offered. So our next poll question is going to be, are you currently enrolled in any group life insurance policy through your employer? All right, and numbers are coming in. Give it just another second or two for anybody to go through and add in. All right. And so this is good. I do like that we're seeing a lot of people going through and being covered. For those that are unsure, I would recommend going through and taking a look at what's offered, especially as Bob was saying, those 1 or 2 times that's a freebie from your employer. You definitely want to jump on that.
Yeah, that's key because there's people that don't realize that those are very low cost and decline them, and you definitely don't want to do that. All right, back to me.
Back to you.
All right, let's talk about calculating your needs. At USA, we believe in a personalized needs-based approach to determine the ideal life insurance for you. You'll see that QR code sitting there. That's a good thing to click on. We use the acronym LIFE, obviously, as a practical guide. Starting with L, we consider all your liabilities. And, we keep reinforcing this includes your mortgages, loans, credit card, any debts. Next, I, for income replacement. The question here is, how would your loved ones cope financially if your income was no longer available? And we're looking to replace your income for a certain period of time. A rule of thumb at USA is 5 times, 5 years. And that's after you take care of all these other things. F stands for financial expenses and funeral costs, ensuring in your absence, your loved ones aren't burdened with these hefty expenses and having to go to that GoFundMe site. Lastly, E for education and extras, especially if you have children and want to secure their educational future. In this calculator, we're able to reduce your total need by life insurance you already have in place and also any long-term savings you have. By answering a few financial questions and accounting for your existing life insurance and long-term assets, you can get a clear picture of the insurance coverage you need for your loved ones. The output provides a coverage amount that will cover all of your outstanding debts and then that 5 years of income replacement. Lastly, remember that life insurance needs aren't static. They evolve as you progress through different life stages, such as things like getting married, having a baby, job changes, retirement, just to name a few. Regularly reviewing and updating your coverage ensures that you'll always be adequately protected. Back to you, Garrett. Another poll question.
Thank you, Bob. And this is
Lost my
actually
voice.
this is my favorite poll question. And so it's, how would you describe your current life insurance coverage based on the LIFE acronym that Bob just went through and reviewed? Seeing the results come in, give it just another minute or two, or second or two, I mean. All right, sharing the results. And so it does look like a few people might want to jump on, take a look at that life insurance needs calculator. And it's always recommended to go through and speak with one of our agents who will go through and can look at your individual situation to make a recommendation tailored to you. All right, Bob, I'm going to give it back to you.
Well, the good news is those that have needs adjustment, they're learning things through what we're talking about. And that's probably why they're here, is trying to, gather information and make the right decision. So cheers to all of you. Okay. Here we are at what's called the underwriting process. Okay, you did all your homework, you talked to your rep, you're ready to go. A lot of people get nervous in this situation, think it's a lot. It's not as bad as it seems. So after identifying your coverage need, the next step in acquiring life insurance is to complete and submit the application and then go through this process. The process determines not only if you qualify for a policy, but at what rate you qualify for. This is done by having you complete what's called a health and lifestyle questionnaire. But it's not just about your health. It's also about things like your family medical history, your occupation. I mean, if you're sitting behind a desk, you're probably okay. But let's say you're driving a dynamite truck, that might be a dangerous occupation. And hobbies, things like skydiving and, parasailing and things like that could be considered. Even travel can influence the decision. If I'm vacationing in Iran, we might be concerned about that. So when you submit the application, not only do you provide your health and lifestyle questionnaire, but you're also consenting for the insurer to request information from groups called the Medical Information Bureau, the Prescription Drug Database, and even the Motor Vehicle Report. You'll also schedule an appointment to complete a physical. Typically, this can be done in the comfort of your home, or you can request to go in the medical facility close to you. Excuse me. The medical exam usually consists of things like taking your height and weight measurements, getting your blood pressure, your analysis, and a blood draw. Once the medical exam is complete, your application can be fully reviewed by an underwriter. You should expect this to take some time as the underwriters receive and process all the information. In certain circumstances, more information may be required, such as getting your medical records or even what's called an attending physician statement from your doctor. Normally, this process can be expected to take between 6 and 8 weeks. Now, I've done everything I should do, and it's time for results. So when an underwriter has all the information required, they're ready to make a decision. So first decision, approved. Hey, congratulations, you were approved. This means the insurance has evaluated your health, lifestyle, and other factors and are ready to issue the policy just as we talked about it when we gave you the quote. A counteroffer. If the results show any potential health risks, the insurer may charge a higher premium than first quoted, which would be that counteroffer. Postpone. There are many times when an insurance company might postpone a decision. This doesn't mean it's a no. It could be because you have a health condition that they want to monitor for a period before they make a final decision. And then denied application. Sorry, you won't be able to get this life insurance, but being denied a life insurance policy, as we know, could be disheartening, but it's important to understand the reason. Denials can range from factors like severe health condition, risky occupation, or even hazardous hobbies. If you find yourself denied, don't lose hope. There are guaranteed issue policies, and we have those available, where coverage is guaranteed regardless of health status. While these may come with a higher premium and might offer a lower coverage amount, they do provide a valuable avenue to ensure you at least have some life insurance in place. So, okay, we've gotten through this. We've been approved. What's next? Well, they're going to issue the policy. So once approved, you're going to receive policy documents detailing the coverage amount, premiums, and other relevant information. This is your policy. Put it somewhere safe. If you have a safe or a safety deposit box, make sure your family, the beneficiaries especially, know where it's at. Now, remember, it's crucial to maintain the premium payments to keep that policy active. And as life evolves, be it marriage, as we talked about earlier, a new child, purchasing a new home, consider revisiting your policy to ensure it still meets your needs. Now, the life insurance industry is evolving. We're seeing a rise in these digital-first insurance providers leveraging technologies to make the process more streamlined. While they may not require a medical exam, they're still assessing the same critical health and lifestyle details, but through innovation and data-driven methods. While these insurer tech companies offer the convenience of a quick decision without a medical exam, it doesn't necessarily mean that you'll always get the lowest premium from them. Note, as far as the underwriting process, it's crucial to be transparent and provide accurate information. Any discrepancies can lead to delays or changes in the premium rates. Garrett, how about another poll question?
I got it ready to go. And this is actually a question that really helps Bob and myself on the product management team get direct feedback from our membership. And it's going through and asking, what is your preference regarding the underwriting process? And we'll go through and let you guys put in your responses. Give it another second or two as we're getting close up to our 100% mark. All right, and we'll go through and close the polls. And it really does look like a good portion of our membership would like to go through the traditional underwriting process to look at getting the best premiums that they can.
And those that are unsure, those are definitely people that want to talk to someone and see what's best for them.
All right, we're going to go through and move you on into riders. Take it.
Take it away, Bob. Okay, common life insurance riders. Having walked you through the steps to secure a life insurance policy, there's one more aspect of life insurance we should touch on before wrapping up and opening up the call for questions. And you heard me say, remember, I'm going to talk about riders a little while ago. Think of your policy as the foundation of your home, solid and protective. Just as the home can have unique features and additions, your policy can be enhanced with extras. These extras come in forms of benefits and riders, which allow you to personalize your coverage and needs even more. So let's talk about them. First one, accelerated death benefit. This allows early access to your death benefit if you're diagnosed with a terminal illness. This is an illness or a physical condition which is reasonably expected to result in the insured's death within 12 months or less. Typically, you can get up to 50% of your death benefit up to a certain point, usually $250,000. So if you had more than $500,000, your max would be $250,000. And then waiver of premium. This will simply waive your premiums of your life insurance policy if you become totally disabled and cannot work. This one's an important one, child term rider. This is life insurance protection for coverage for all of your children in your household under a single rider and provides protection through adulthood. Let's go back where I just said, all the children in your household. So if you're like my lovely wife, she comes from a family of 12. This would be one low price for all those kids. So it'll protect them from whenever you put them on it through adulthood. That's usually around age 25 or 26. It also gives them a chance to convert to their own life insurance policy in the future when they become an adult. Accidental death benefit. This will pay an additional benefit if death occurs by accident. Note on this one, don't count on this in providing coverage for your family. It should be like gravy, an extra. For example, if I have a $500,000 need that I identified that if something happens to me, that's what my family needs, I will not get $250,000 of regular coverage and $250,000 of accidental death benefit rider because I'm leaving myself not fully covered. So then we have things like perks riders. Perks riders are kind of a newer thing. They provide access to resources beyond traditional insurance, such as discounted access to wills and trusts. And then this isn't a rider, but still very valuable and worth noting. This allows the policyholder to convert all or a portion of their term policy into a permanent policy without having to go through a medical exam. This can provide flexibility as financial needs change. Remember when I was talking about your policy is coming to an end, your term policy, what options do you have? This could be one of those options, is to convert part or all of it to a permanent policy. And remember, don't wait till the end to do this, because the later you wait, you're still going to hold whatever rating you had in that term policy. But every year that ticks away and you get older, that price is going to go up. Next, let's talk about life insurance riders designed for the military. As we know, USAA deeply values its commitment to the military community. Because of this, we have tailored several riders to address the specific needs of our service members with what we call USAA's Military Protection Plus. This consists of two riders, the Military Future Insurability Rider and our Military Severe Injury Benefit Rider. To my knowledge, USAA is the only insurers that has these riders. And as we know, I mean, if you're a member that's military, prior military, retired military, or even a family member of military, it's hard and dangerous work. I mean, our men and women are risking their lives for our freedoms, and it comes at a cost. I mean, a lot of times you have someone that comes in there as a young, healthy person, but when they go to leave the military, based on everything they've gone through, it's not the same. So first, let's talk about while you're in the military. Military Severe Injury Benefit Rider. What this does is provide you a $25,000 benefit if you are severely injured in the line of duty. That's a benefit that comes at a time where you probably need that kind of help, because could be life changes that cause you financial harm. Military Future Insurability Rider. This one allows a service member to acquire additional life insurance protection when transitioning or retiring from the military, regardless of health conditions that may have developed during the service. This is to enable you to replace up to what you now have in servicemen's group life insurance. Remember, I said the best, we highly recommend that as a policy. So it'll replace those SGLI benefits, a group policy. That's what I meant to say. With the unique challenges of our service members face, it is evident how tailored and personalized life insurance like Military Protection Plus can make a difference. Let's talk one more thing about riders. You know, all the riders we talked about, some come at a cost, some don't. So the no-cost riders, those are accelerated death benefit, both the military riders and the perks rider. Riders that have additional cost, waiver premium, child rider, although not much of a cost, and accidental death benefit. In closing, for me, you've heard a lot of information. And in a moment, Garrett's going to tell you the next steps to help you in your journey to protect your family. The key is you've got all this knowledge. You're probably really fired up about, I need to do this. Make sure you get started. Don't put this off. Garrett, take it away.
All right. Thank you, Bob. So we're going to go into our last poll question, and we're going to launch that right here. And it's going through and asking, do you think specialized riders such as Military Protection Plus can offer unique and necessary benefits for individuals serving in the military? We'll give it just a minute or two as we see the results coming in. All right, see the results slowing down, so I'll give it another second or two before I end the poll. All right, and it does look like a strong majority do think absolutely when it comes to our Military Protection Plus rider and the extra benefits for our military members. Now, one additional rider that we'd also like to mention is our life events option rider. You can see this on both permanent policies and temporary policies as well. And what this does is gives you the ability to go through and increase your coverage throughout when you have different life events, such as getting married, having a child, and purchasing a home. It makes it extremely easy because having that rider, you're allowed to increase your policy without having to go back through medical underwriting. So whatever you had qualified at for your policy, you'd be able to go through and keep that rate when you go through an increased policy. Now, remember, every individual and every family has unique needs, and our goal today was to provide an understanding to help you make informed decisions. And we're here every step of the way. The QR code on the left, you'd be able to go through and scan that to schedule a call with one of our life insurance specialists, or you can always pick up the phone and call in. We have agents available Monday through Friday from 7:30 in the morning until 8 p.m. We also have agents available on Click to Chat. Our Click to Chat times are from 7:30 in the morning until 5:45 p.m. You can also learn more by visiting USAA's Advice Center that covers a range of topics with expert insights. Now, I know we've covered a lot today, and Casey's been monitoring your questions as they've been coming in, and I'm going to be handing it off to him to go through and answer some of those questions. Casey, on to you.
Alrighty, thanks, Garrett. I'll just jump straight into it here. I pulled some questions. So first one I got here is what's the average price for life insurance? And so I just printed some sample quotes here. Let's say we take a standard 35-year-old male, and let's say that he comes in at, good health. Looking at a term policy, I ran 250,000, 20 years, rounding up to the nearest dollar. We're at about $14 a month. Same time, if we were to look at about 50,000 of more of the permanent whole life coverage, we're just under $58 a month. So combined, if you wanted to look at the two, you'd be just under $72 a month for more of a comprehensive approach to the coverage. Now let's take that same 35-year-old male, kind of at standard average Joe Health. We looked at 250,000 as a 20-year term. We're about $27 a month, and a $50,000 permanent whole life policy, we're about $63 a month. So if you combine the two, about $91 in total. So those are just some sample quotes I put together. Female rates tend to run just a little bit less than male rates. Longevity is on y'all's side. And so for the same health ratings, female 35, you can expect the cost on those to be just a little bit less. Let's see, when does someone typically start looking at into life insurance? I would say anytime's a good time to review it or look at life insurance. USAA insures many children, even newborn children. There's typically a need even at younger stages of life. As sad as it is, or as sad as it can be, final expenses can be a cost that we all incur. Other side of the coin, we also have many young adults all in, and they get married, have kids, buy a house, go to school, and take on some student debt, like Bob was saying earlier. Ultimately, I'd say there's no one size fits all to life insurance, but I'd say a good indication of needing life insurance is if your passing would cause financial duress to a family member, it's probably a good time to look into life insurance for yourself. So, call in, chat in, talk to your agent, and, just make sure that you're properly covered. I know we're a couple minutes from time, so Garrett, I'll turn it back over to you to finish us out.
All right. Thank you, Casey. Now, I want to thank everyone for joining us here tonight. If we weren't able to get to your question tonight, we welcome you to call or chat in, and we'd be happy to address that question directly with you. Also, USAA will be hosting a webinar in Medicare in preparation for open enrollment next week. So if you or someone you know is aging in and has questions about Medicare, please scan the QR code to go through and register. If you'd like to attend, but you have a timing conflict, still register, because that will ensure that you would receive an email link to the replay. And I want to say thank you again for your time, and thank you everyone for trusting USAA.
Thank you, everybody.